This transformation helped Coforge, which was making around $500 million before acquisition revenue, to approx 1.5 billion US dollars today.
That after Bearings came in, sort of a cultural shift happened in the company. So from being a very boring services-centered company, it completely transformed from, as you said, a performance-driven culture. In the last 3 years, almost 25% revenue CAGR. Keep in mind that this is in the when the industry is in the downturn. And as you mentioned, that the after Bearing acquired, the company went from $500 million of revenue to 1.5 billion, almost 3 times. Yeah, as of today. So that also emphasized that the company was strong in terms of revenue growth. Of course, it faced some pressure in terms of margin. No company can be completely isolated from the industry headwinds. That is also the case. Hi guys, welcome back to the new podcast known as Common Sense by Rupeeting. We're back after a nice festival. First of all, Happy New Year to all of the viewers. I hope your festive season has been very wonderful. And as you can see, some of us are still in festival mood. There are only two of us today here. But don't worry, we'll bring, and hopefully also we have been quite irregular in posting podcasts. So hopefully we'll also start being regular because the market fall and the festival was it was quite a hefty week. So, but don't worry, we'll start regularly. So stay tuned for that as well. And today, after a heavy correction, there are a lot of things on our plates, and we were going through so many companies, so many sectors, and all. And one particular sector which we're going to talk about today, and a company from that sector has been quite under our radar since last couple of months because there has been signs of recovery in that particular sector because it's IT sector, by the way, because the US is predominantly a very big factor in terms of IT companies and all. And the past 2 years have been a sort of very hellish for the IT sector. And this has been, these are not my words, this has been said by a mid-cap IT company CEO. So it pretty much sums up how the past 2 years have been for the it wasn't even a roller coaster ride, it was just one side down, right? And I think the number also tells us the same story because the IT index has just delivered 14% absolute return in the past 2 years. So that is, I mean, what, close to government bond yields. I mean, 2 years where, and at the same time, Nifty has given 34%. So a clear underperformance, definitely. Uh, and but yeah, there was one company in this sector only, which was kind of like a bright spot in the industry, which at the same time when the index given 14% and the Nifty has given 34%, this particular stock has given 50% return, which is quite commendable given the industry circumstances and all those things. And it seems to create its own unique place in the industry. So I think because our viewers click on our video by watching the thumbnail, so you guys must have already guessed that we're talking about Coforge, but
Right.
it outperformed its peers significantly. And today we're gonna explore more on the company that whether it can continue, in outperforming the rest of the industry going forward, and what has been the reason behind this extraordinary performance behind the Coforge stock price. So before we just directly start in the Coforge, maybe Harsh, you wanna give a little bit primer on the history of Coforge and how it is today.
Okay. Yeah. So, hi guys. Happy New Year from my side too. So basically, let's talk about Coforge. Coforge was originally known as N double IT Technologies, which saw a turning point in around 2019, where it was acquired by Baring Private Equity Asia, also known as BPEA. Okay. This shift led to rebrand NIIT into Coforge and marking a transformation in its focus and operation. So basically, after the acquisition, Coforge started heavily investing in digital capabilities like cloud services and AI solutions. And also, it shifted They focused to a high growth sector such as banking, insurance, travel, and healthcare. This transformation helped Coforge, which was making around $500 million before acquisition revenue, to approx 1.5 billion US dollars today. Okay. The ownership also, apart from bringing revenue, it has also brought in performance driven culture for the company and new operational efficiencies. Also, it has established Coforge as a key digital transformation partner in its IT service landscape. So, Chaitanya, can you help us why Coforge is set apart from its peers?
Yeah, I think as you said, that after Bearings came in, sort of a cultural shift happened in the company. So from being a very boring services centered company, it completely transformed from, as you said, a performance driven culture. So maybe there were a lot of incentive changes must have happened because ultimately your manpower, your employees are the raw material in terms of your IT company, sort of
True.
dehumanizing those public. But sorry for that. That is true. Capitalism is led us to this. But yeah, so I think what sets Coforge apart, so primary reason, and I think most important one is also because the company outperform in terms of revenue growth compared to it mid cap peers. Of course, compared to large cap, it's going to outperform because of the low base and the different small size of the company.
That's true.
So that might not be an appropriate comparison. That's why compared to mid cap IT companies, take example as your LTTS or Emphasis. So the Coforge has delivered in the last 3 years almost 25% revenue CAGR. Keep in mind that this is in the when the industry is in the downturn. And as you mentioned that the after Baring acquired, the company went from $500 million of revenue to one and a half
Right.
billion, almost three times. Yeah, as of today. So that also emphasized that the company was strong in terms of revenue growth. Of course, it faced some pressure in terms of margin, but no company can be completely isolated from the industry headwinds. That is also the case. But on the revenue front, they did outperform, and that growth was also broad based because they are present, as you said, into multiple segments such as your banking and financial sectors, uh, insurance sector, transportation, logistic, travel. So each of these segment was each of the segments saw a great growth, plus the global geographical presence that the company had. They are predominantly in USA market. 50% of the revenue comes from USA, and other from around 40% from Europe. So pretty much 90% of the business come from outside of India. So all the geography present that the company had, that also seen a tremendous growth in terms of revenue terms. That was one reason. Secondly, the company's strong result come from a relentless focus on execution, because when all the other companies are focused on trendy tech like AI, data, cloud, or all those things, Coforge also focused on that. It's not that they didn't, but they also delivered on those terms. For example, one example I know that the big companies, I won't take the names, but the big companies are giving their employees like a 10-hour some AI course, and then they are coming out and saying that our employees are Gen AI capable. So of course, 10-hour course cannot make your employees Gen AI
That's
capable. Yeah, that's just I think just a gimmick that the companies are following just because they want to try to play the whole AI theme and try to showcase themselves as the company which is leading in terms of AI. But Coforge actually executed those services, and they have a very internal unique structure. So instead of they chasing bunch of small wins, they try to focus is on a critical projects which are big in terms of order value as well as the criticality of the execution. So they focus is on that. Of course, it's a very risky bet. Sometimes you can win, sometimes you cannot win, and uh,
true.
if you don't win, all those resources, time invested, everything can go to waste. But fortunately for the company, since last 7 to 8 quarters, there have been not a single project where they had taken such kind of a bet and lost it. So that is there. It also tells you that the company is really good at what they are doing. Basically, if you want to sum it out, it just we can sum it up in the single line. Plus, there is something which is important in the industry is a sales model, especially for a small company like Coforge, because big names or everyone knows. But a company which is just $1.5 billion, it's pretty small in terms of US market. So
Correct.
for them, yeah, sales channels also become interesting because they don't only focus on the existing client and just delivering them product and moving on from them. They also do something relationship building. So after delivering whatever the product they are supposed to deliver, they also continuous follow up also is done by the company to ensure that it is consistently adding value beyond the normal your client's relationship. So that is that. And there is this sales client services group, which they call internally. It is
Right,
not
right.
only, yeah, so it is not only for uh, this is sort of a client farming kind of an engine. So they don't only focus on the existing client plus, but they also aggressively go after the new clients as well. So I think this method has led to a repeat business rate, which is very critical in terms of IT because that ensures your future revenue visibility and all. So for Coforge, this number stands at a wonderful 95%. This shows that how Coforge meets client expectation and that helps them this consistent growth. So even though industry went through a sort of a struggling period since last 2 years, companies clients continued giving them the repeat business and which has reflected in the revenue and ultimately the stock price. So I think that pretty much sums up that how the company navigated last 3 years of turbulence. But I think going forward, there is something new also company is doing, which I think Harsh will put
Yeah.
light on that.
But to get a 95%, what do we say, retention rate or repeated order is a very good positive sign for the business. Apart from that, Chaitanya, if we look at this thing, company has been, what you mentioned is about organic growth for the company, what has helped in its
Yeah, yeah,
organic. But
absolutely.
company has recently starting moving in the inorganic way also. So for this, they have
Mm,
recently acquired a stake in Signity Technologies. They have acquired around 54% stake in this quarter. Furthermore, the company is Coforge is aiming to completely acquire the Signity Technologies, but its swap ratio and relative valuation is yet to be determined. Okay, so the acquisition is expected to support Coforge's target of reaching around $2 billion in revenue by FY 27,
mm,
and also enhancing Coforge margin by 150 to 200 basis points. And the key benefit that
okay.
this acquisition is going to help Coforge is it will help Coforge expand into new verticals like retail, high tech, and healthcare. Apart from that,
Okay.
it will strengthen Coforge's position since it's a relatively
Mm,
small company right now in
mm,
the US. So this acquisition will help Coforge establish its presence in Southwest, Midwest, and Western region of USA. So
mm,
increasing its revenue in USA much more. Then, as you mentioned earlier, the company was not focusing on trendy topics like AI and how other
yeah.
companies are doing. Coforge is acquiring this to help it increase its capabilities in specialized services, especially in AI adoption also. So this will help company to move into these verticals also. So the integration has already shown a positive effect. Coforge is reporting a 6.1% sequential growth rate uh, in the consolidated EBITDA margin cost, and the EBITDA margin has also rose from 12.6% in Q1 FY 25 to 15.8% in 2Q FY 25. For Coforge further
Okay.
expects synergies from this acquisition, aiming to reach a EBITDA of above 18% by the end of FY 25, with
Okay.
early selling initiatives signaling accelerated growth from the acquisition. So I would like Chaitanya to
Okay.
give more about Coforge's
So,
audit and
so,
other.
so, so just to make it clear, I think, as you said, company owns around 50% of the security. So that is for the decision making capability, of course. And they have plans to completely acquire as well in future, which of
Right.
course the swap ratio and everything will be decided later, but that is there in the plan. That will help company, as you said, go from 1.5 billion right now to 2 billion. and the
correct.
company is projecting that by the next FY27, right? That is another 2.5 year from here. Okay. And of course, the new vertical that you talked about are also very interesting because, as I said, the company is focused on banking and insurance side, and Signity offers a quite contrast verticals to that: retail, healthcare, high tech, and all. Huh. Okay, so that is very interesting. So it is not just because there was some questions also arose from the street about this acquisition, because Signity is more in terms of the uh, technical testing side of things. And when they acquired this, so the most of the analysts those questions such as that, why are you acquiring such a company which is just into the testing part? But what the street missed was, and which is reflected in its favorable first quarter result, is that the core services that the Coforge acquire, this can be a really good complement to that services, because then the Coforge also can test those services firsthand. So before sending out a full-fledged product or services to the client, they can have their own testing capability in-house now, thanks to the Signity acquisition. And as you said, the already the integration was started. So I think the acquisition was announced in the month of May of 2024, and now almost 6 months has been passed. And first quarter, there was the 2Q FY25 was the first quarter where the company was announced the consolidated result, including Signity. And
Right.
of course, as you mentioned, it has been the result has been very good, very positive side. So the margin, I think for me personally, margin improvement from almost 13 to 16% is a very good positive to take away from one key takeaway. And
Correct.
of course, the future margin are also expected, as you said, from 13 to currently 16 and now 18 by the financial year end.
Right.
Yeah, so that explains the recent rally as well after the result. Because when the company acquired Signity, there was I think if I remember correctly, there was 10% circuit in the lower circuit, by the way.
Oh,
And now, yeah, so after the result, it has been a complete different picture. So that is well done, well executed from the management of the Coforge. And I think this is, I think the going forward ultimately, since the Signity is very that not big compared to Coforge, so that will be around 10-15% of the Coforge business. But what about the rest 80%, right? Because only you can't depend only on the inorganic thing. So there are several other things which are working in favor of Coforge as well. So first of all, the order book, which is the like backbone of any company, and for IT company, it becomes more relevant because it ensures that the how your next year gonna be, based on which the companies generally provide guidance and all those things. So
that's true.
order book, yeah, as of second quarter, which is also the end of first half of FY25. So on a sequential basis, first of all, the order book grew on 43%. So that is a big number. Of course, we can uh, consider the bit of seasonality in those things. So that uh, might not be the true that big of a number as we think. But in terms of the year on year, which is, I think, a great comparison. So it's next 12-month executable order book. So not only order book, the order book that the company expect, which will be executed, that is also 18% higher compared to last year. That is a very good number. So that also ensure that FY25 also might be as good as the company saw in the past 3 years, or with Signity now in the in the company as well. That one also grow further. Secondly, the demand turnaround. So everyone was talking on the street that the IT industry now seems bottom out because US inflation is also going down. The Fed has started cutting rates. Now, after the election overhang will be over, the starting from the second half, US election, second one. So starting
Right.
from the second half of FY25, that should also be more clear. So there was expected that the more certainty will be there in terms of US economy and all, which will lead to a more certainty for the IT industry. So Coforge was actually the first management to acknowledge that there was a positive turnaround in the industry. Having said that, the company is also saying that we do look at these metrics, but not from that we're dependent on them. They're saying that if our business is rock solid, whatever happens, of course, if Tomorrow war happens in US, then no one can do anything. But apart from that, yeah, small things just like that, they don't take that much, they don't put that much weight onto these things because business at the end of the day is what you can do and what you can achieve. So of course
That's right.
these things are positive, and the company has acknowledged that the demand has been turning around, and the offering that the Signity has, vertical that it has. So that is also that position company in a way that will benefit from this demand turnaround, especially after the Signity acquisition. Because as you said, the company was predominantly focused on the east coast of the US through its services. Because as I said, 50% is from the financial services, and New York is definitely the financial capital of the world. So it was ideal that the most of the business came from the east coast of the US. But now after the Signity acquisition, they will expand all over the US because Signity is predominantly on the west side. So it wasn't just a US based acquisition; it was more in the very micro level US based acquisition, which help grow them pan USA their
That's
presence, and which will they will benefit after the demand turnaround will be there. But that is again a sectoral thing. So I'm not saying that Coforge will be the only beneficiary. That is good for the whole sector as well. And the third thing, which is very important, is the diversification in terms of company. As I currently said, that the company has gone from one side of the part of the US to now being present across the US. But I think vertical wise also, because back when it was NIT Technologies, before even Barings acquired the company, most of the company's business was from airline industry, which is again very volatile because it dependent on crude and all. Currently, airline, we can't see airline anywhere in the company's sectoral diversification. So that is completely, not completely, but yeah, somewhere very very reduced. And now with Signity acquisition, the new vertical will come, and company's existing vertical as also has a very wonderful diversification benefit. So that is there. So apart from Signity, the strong order book is there, demand turnaround is there, enhanced diversification in terms of vertical and geography is there. So all these things are working in favor of Coforge, and it appears that the with these promising tailwinds, some of these are company specific, some of these are not company specific, they are sectoral specific. But having said that, company appears to forge its niche. That's a lame joke there. So company appears to yeah make its place in the IT industry, which is by the way one of the crucial industry in terms of Indian economy.
that's true.
So yeah, as it continues to grow, I think the target that company has given, that $2 billion company by FY27, we might not be even surprised that company achieve it before the timeline. So yeah, I think that is about the company business. We haven't dwelled into valuation that much because we believe that these companies are high growth companies, and one should look at rather than looking it from a isolated perspective, one should look at the comparative perspective as well. So we won't dwell into that because again, this is just for educational purposes. We are here to educate about the businesses and all. So decisions you should take from your financial advisor. If you don't have any financial advisor, then yeah, you can dwell into the description and make us your financial advisor. Then we can help you do all your all things basically, portfolio management and all. So I think that is it for this week. So I hope everyone's back from the festive season. And yeah, that's it. Bye bye.
Don't
We'll
like,
see you in the
share,
next one. Yeah, like, share, subscribe. We'll see you in the next one, and hopefully we'll be more regular from now. Yes, thank you.
subscribe.
Bye bye.